Welcome back, investors, to Ticker Time News. I'm Adam, and we lucked out with a bounce today after some wild volatility at times. But this back and forth is coming to an end, and this market is going to break. We'll look through the charts and figure it out. Expansion, which we had right here, boom, leads to contraction, which that's what we've been seeing in this ascending triangle right here. Green, red, green, red, green, red, up, down, up, down, up, down. You get the point, right? Okay, this contraction leads to expansion. Which way are we going to break from this ascending triangle? We showed yesterday that this pattern is everywhere on all kinds of different stock charts. So we're going to look at a few more, just like we did yesterday, and kind of determine which way we're going to break. We're also going to look at the data that comes out tomorrow, because we get our first Fed speak tomorrow, and that will be very interesting indeed, because we got the Fed minutes today from their December meeting, the FOMC meeting that took place on the 13th and 14th. Yeah, we broke that down to our investor, our private investor community earlier. So we'll get into it. Now, with that said, be on the lookout for either a breakout or a breakdown. It is coming, and it's probably going to take just a simple data drop, an econ drop, to get this to break, okay? Oh, and our top momentum stock pick for this week is currently up 4.9%. We'll check in on that during Friday's live stream, like we are going to do every Friday going forward, to see how it did for the week. Plus, we are about to pick our first stock idea for 2023 later this week. We'll post it on Saturday. If you would like this information, simply click the first link in the description. All right. Let's get through this today. The major indices, they registered some decent gains. I'm going to switch over to the 15-minute chart from the daily chart. You can see, real quick before I do, on the SPX ticker for the S&P 500, you can see that resistance line held again today, even though we were up 0.75%. And so was the SPY. It was up 0.77%. We got the Qs up 0.5%. The Dow up 0.4%. The small caps were the biggest winners today. The IWM was up 1.25%, but they all stop at that same resistance line. We'll get into it. All right, real quick. Let me go and switch to the 15-minute chart, and I'm going to do a little magic here and get this sorted out so we can see what's happening. All right. Today's 5-day EMA, all right, which is to me, the most important moving average of the whole bunch. Why? Because it's the most frequently tagged. Now, on the 15-minute time frame, it's not a 5-day period moving average. It is actually a 130 period moving average, or yeah, we do an equation. There's 390 minutes in the day. You divide that by what time frame you're looking at. So for example, with the 15-minute time frame, that breaks down to 26 15-minute chunks during the full 1 day. And then you multiply that by 5 days for the 15-minute chart. That's a 130 period moving average. That's what we're looking at. That's what this purple line is going across the screen. I'm going to highlight it here real quick. You can see right here, it was declining. Then we had the gap up. It moved sideways. Then it started to decline again. But now, with today's open, since we had this gap up on today's open, that 5-day EMA is now more neutral. It's moving sideways, right? When that 5-period moving average is going down, it's trending down, that should give you a bearish bias, okay? When it is flat, that should be a neutral bias. And when it is going up, it's in an uptrend, that should give you your bullish bias. So it's important, this moving average. So I'm showing it now during the live stream for the first time, I may add, at the 15-minute time frame to give you more context to help you make a better decision on what to do. So just again, write this down. On the 15-minute time period, it is a 130 period moving average. That's what the math works out to be. And again, to get that on any time frame that you're looking at, you take 390 minutes in the open cash normal hours trading session from 9:30 a.m. to 4 p.m. Eastern. You divide that by your moving average minutes. So if it's a 15-minute time frame, you divide it by 15. That would come out to 26 15-minute sections throughout the day. Then you multiply it by 5 for the 5-day moving average. And for the 15-minute chart, again, that's 130 period moving average. Just to give you more context to help you understand these charts even better. So right now, even though today was very choppy and very volatile, we are in a neutral bias right now, okay? So keep that in mind for tomorrow. Does it mean buy the dip? No, it doesn't. Does it mean to sell the rip? Absolutely not. It's neutral. So you can really take it either way. That last 5-minute, last 5 minutes, I mean, look at that last candle there. I mean, it is booming. And then there's a little tiny candle there holding us up right into the close there. But there was a big, strong move. And that's what put us back into positive territory after what? After the FOMC minutes came through and wrecked the afternoon. Look at this. Look at this. If we break this down, this morning at 10 a.m., the market drops. Why? Because we got an econ drop, an economic data point to look at, right? And it was okay. It was a little bit lower than expectations, and that's the PMI. And then at 2 p.m. Eastern, we get this series of down candles because of the FOMC minutes dropping, okay? Now, the decent gains we had, look at where they tapped out, that black line. This black line right here is the anchored VWAP that is anchored to the low of 2022, which occurred on October 13th. So as I scroll over, yesterday, look at this. It acted as resistance. If we go back the day before, didn't come close. The day before that, which was last Thursday, didn't come close. Last Wednesday, didn't come close. Last Tuesday, you get my point. It's been under that anchored VWAP for a while now. So that is acting as overhead resistance right now. And then that blue support line, it's going up across the chart like this from left to right, going all the way across the screen. Okay, everything should be back in working. What a little fluke that was, right? Okay, so yesterday, that support, again, held as support, and it bounced off of that. Today, we got a little more momentum, but a little more choppiness because of the data drop and the FOMC minutes. Okay, let's keep moving on with today. Now, the uneven performance this morning was also due to some uneven performance in the mega cap space. If you look, Apple, Tesla down yesterday. Today they were up. We'll go look at those charts in just a moment too. But I want to get through the main indices before we move on to those individuals. So let me clean this one up. We'll go over to the SPY, have a quick look at that one. Almost got it. Almost got it. Now, while I'm cleaning this chart up, let me just mention the main point from the FOMC minutes today, all right? The main thing that shook market participants a little bit. There wasn't anything in the report that I was hoping to see, so it wasn't too surprising, but it did give market participants something to think about. And it was this. There were no participants, FOMC members, voting members, none of them anticipated that they would, or that they would think it to be appropriate to begin reducing the federal funds rate target in 2023. That was the biggest piece of data that, if I could boil down every sentence that was released, it would be that one. That was the biggest point of contention, I think, that market participants took as, okay, hold on a minute. If you remember during yesterday's live stream, I did say that I think we're going to get 2 more rate increases, February 1st and then in March, because February 1st is the first decision day for the FOMC. And then the FOMC will hold those rate hikes at least through September of this year. And then from there, what's the data going to say? How is inflation going to be at that point? How is the economy going to be? How weak is it going to be, you know? So I guess I'm not that surprised that nobody thought it would be appropriate, FOMC, to lower rates in 2023. I don't think that's a big surprise. And the volatility we saw, once that kind of got worked out in the last 15 minutes of the day, we saw that big green candle, right? The big rally that took us from being negative for the day to being positive again for the day to close with these gains. So I think market participants, once they first heard it, they were like, oh no, this is bad, right? Because a pivot is typically what happens when the economy is slowing down, when the economy is slow. And if we go here, give me one quick second to adjust this chart. I want to go pull up the Fed. Now, I don't remember if it is, yep, there we go. The Fed funds rate. Just type in Fed funds in TradingView. And this is it, okay? Now, I don't have with me when each recession took place, okay? But typically, once the Fed pauses, and that's, let me show you here with the highlighter, just so we're on the same page. Going up, those are rate hikes, okay? Get my highlighter to work. Going up, that's the Fed taking those rates higher, hiking rates. Then the plateau is when the Fed holds and they don't do anything. They just keep the rate the same. And then the pivot is when the Fed starts to decrease rates, all right? Typically, once the Fed starts on this track right here, and I know my arrow is not that great, once the Fed starts to lower rates, that can actually cause a negative effect to the markets, and the markets go down on a Fed pivot. I know you may have heard across YouTube that that's not the case, that it's a joyous thing for the Fed to pivot. Actually, no. The Fed pivots when the economy is weak to help to hold it up. So it's not a good thing. I know in recent history, it has been a good thing for the markets, but historically, it's not. So keep that in mind, that the Fed is thinking that once it goes up maybe another 50 basis points, right, and it gets to that 5%, okay, somewhere close to where it was back here in 07, that it's going to hold throughout 2023, which on this chart is a very long time, okay? 2023. If we look back here, the last time rates were above 5%, and it was 06, July 1st of 06, and they held it until July of 07, July 1st of 07. So they held it for 12 months, all right? 12 months. Is that something we're going to see now? Is that what's going to take place? Well, it could very well be. It could very well be. Now, of course, it's up in the air. Anything can happen. I mean, if the economy really sinks and crashes during the summer, then the Fed will start lowering rates. It's going to depend on the data. And right now, at least for the December meeting with the Fed, the FOMC, they're not thinking that they're going to have to cut rates in 23. So there we have it, right? Okay, let me go pull up the SPY here now that I got that out of the way about what the Fed is talking about. And just to kind of recap there, that means the Fed's not planning to pivot until 2024. Pretty big deal. Of course, unless the data is substantial in some way and it brings it down. All right, the SPY, we got the very same situation as we saw on the SPX. We've got that very hard trend line that was still held today. There was no breaking above it except intraday, and it closed right on it, 383, right on it. So what's going to happen tomorrow? Well, tomorrow's going to be a red day. I think the odds are in our favor of calling tomorrow a red day, a down day in the market. If this same sideways pattern that we've recognized here in the ascending triangle right here, then we're going to continue to move forward until we get pinched, or at least get closer to that pinching point where the triangle finally meets, before we get a breakup or a breakdown. But then again, the data could tell us tomorrow. The data could tell us on Friday. Once the Fed comes out and starts talking, then that's when things can get really, really squirrely. And that's how it was in 2022, whenever the Fed came out and talked. So we've got that very, very tough trend line there. Let me go to the 15-minute chart, and just to show you, let me open this up, and I'm going to make sure that 5-period moving average is here. So you can also see that the SPY, you can see it there. We opened just like on ticker SPX, we opened above that 5-period moving average or 5-day moving average, and we're now moving sideways with it, okay? So we're in more of a neutral structure. And if you take into account on the daily view, the ascending trading channel that we are in, and let me just pull that up again. Where is it? There it is. Chart patterns. The ascending trading channel right here, now that we are in the neutral or a neutral bias, you can see flat top, ascending bottom, that this can now break to the upside or the downside, okay? Yesterday, I was thinking and leaning more towards breaking to the upside, but the data changes. And that's why we do these live streams every day. Every day the market is open. So you get the clearest and most honest information that you can. All right. So neutral bias there with the 5-period moving average after coming and being in a bearish bias. That's an improvement if you are on the bullish side. Okay. You want to see this line start to get rid of some data and start angling up. That's what you want to see if you are bullish. If you are bearish, then this neutral sign, it's still on your side, right? This just gives a little extra hope to the bulls. That's all it does. That's it. Nothing else. All right, let's hop over here to the Qs. We'll start on the 15 minutes since we're already down here, and then we'll hop over to the daily view. Now, that 5-period moving average, you're going to say, wait a minute, is that right? Well, let me just double check. I'm going to show you 130 right here. This is correct. On the QQQ, we are still slightly moving down, but it has started to at least flatten out some, right? Big move down on that 5-period moving average, and now it's just barely starting to kind of level out, all right? If you're more in the bullish camp, you want to see this flatten out and then start to slowly move up, all right? If you're on the bearish side, then you want to see this thing not flatten out, but continue its trend down, okay? So that's what we got. So the Qs, I'm sorry, we're in a little bit more of a bearish structure. You can see on the ascending part of the triangle, we've got support, support, support. It just keeps holding and holding and holding. And eventually, we're going to get to a point where price action gets a little too tight, and the pressures that be, contraction leads to expansion, and we're going to break. Either break out and up or break down. Either way. Okay. One other thing I want to point out is the on the daily chart. Let's go over here real quick. Give me just a moment to make this a little easier to see and understand. Okay. Open it up. We are way down on the chart here. Okay, let's just do this real quick. I want to get those two blue dots out of here. You can see the blue support line angling up and the red line going straight across. First, it was support, then resistance and resistance. It just continues to hold that line. So we are getting price to not be as shifty and squirrely and volatile. Again, as the ascending triangle works its way out, but expansion leads to contraction, and we're going to break. It's just literally the point of this is next Monday. So we've got literally 3 days, 3 trading sessions until we get to the point of this ascending triangle, and we've got to break from it. Okay, we can't just continue in this pattern. Although data can change, it is simply a, let me just real quick pull up the chart pattern so you can see again. We are simply still in this trading ascending triangle. Okay, so the more the 5-day EMA starts to flatten out, the more neutral we become, the more we can break up or break down. Okay. All right. No worries. No worries. I am awesome. I feel awesome. I feel really awesome. I am glad that you are here. Truly. No worries about being late. We've just been recapping about the Fed minutes and the SPY, the SPX, what's going on. So it's all good. It's all good. Okay, let's see here. Let's go now down. I want to show you the Dow just real quick, and then the IWM, and then I'll go to the dollar, and then we'll go look at some stock charts on some specific companies. And remember, if you've got questions, hopefully I have an answer. If not, of course, I'll get back to you. Just leave them in the comments. All right. On the Dow, obviously that thing moves way slower. Way slower. But we have a similar structure developing with the ascending triangle right here, okay? So the same thing we're seeing on all the charts. And we have expansion, which leads to contraction, which leads to what? Expansion. You got it. That's right. The same forces that move this market, they're just doing it again. Now let's go to the 15-minute time frame. Let me open this up, show you that 5-period moving average and how today it flattened. Oops, that's not what I wanted to do. And how today it started to flatten out, which puts us in a little bit more of a neutral context, okay? All right, so again, the Dow moves slower, ticker DIA for this, but it has been in a downtrend, right? And then we get to today and we start to move sideways. So again, the Dow is getting now into a more neutral bias, all right? It's not bearish, it's not bullish, a neutral bias. So that ascending triangle is really starting to play out, and it can break either way, up or down. And my guess is that it's going to be some sort of data drop that causes the break, right? All right, IWM on the 15-minute, then I'll go to the daily view real quick. Look at this today for you. Like I said at the very beginning, small caps did really good today. We're getting a bit of an ascension here on the 5-period moving average now, which is more of a bullish bias, less neutral, right? And the steeper that thing starts to rise, the better. Look at this. That blue support line has held. Anytime we've gotten below it, it's just been for a short 30 minutes or less, and then we break back above it, right? This is the 15-minute time period, so we've got about a week's worth of data on the screen. We were in a downtrend, okay? Now, with this gap up and this bigger move today for the IWM, your small caps, it's starting to ascend. All right, let's clean this up. And then I'm going to go to the daily view. All right, daily view. Okay. Question, do you sell covered calls, covered puts? Not a whole lot. Haven't done it but a few times, quite frankly. And it's something that I would have to double check to even be able to successfully do it. That's how little I've done covered calls or covered puts when dealing with options. All right. Using them to hedge, yeah, they can work. They can work as a hedge. This sideways movement, maybe not the best, particularly. But again, I'm not that familiar with them because I don't use them. So I guess the best thing that I can say is that I would have to look at them a little closer to refresh my memory, to really give a solid answer and feel comfortable with that answer. All right, on the daily chart, IWM still, and then we'll go look at some individual stocks. We have that same resistance line, the same ascending support line, and that 5-period moving average, which is the light blue line in between the candles, right? On the daily chart, you want to see the candles connect with it, and we're still connected even though we started to ascend today with it. So a little more of a positive bias, just a little, for the IWM. The ticker SPX, the SPY, those are neutral right at this moment, but in an ascending triangle. The Qs are still in more of a negative bias, but an ascending triangle. The IWM, a slight positive biased, and still in that ascending triangle. And the Dow in more of a neutral biased and in an ascending triangle. So right now, the overall broader market is telling us that the bias should be neutral, and this market will break soon, like within the next 3 sessions, because the cycles of the market are expansion, contraction, expansion, contraction. We expanded, we're in a contracting mode right now, expansion is next. Okay, and our best guess, our best technical analysis says that it could happen as quickly as within the next 3 sessions. That is like wow to me. Okay. Oh, and talking about the broader market today, the internals, right? The breadth of the market, it reflected a pretty decent positive bias. Why? Because advancers led decliners by a 4-to-1 margin at the New York Stock Exchange and a little bit more than a 2-to-1 margin at the NASDAQ. And to see this visually, if you look at the Invesco S&P 500 equal weight ETF, ticker symbol is RSP, that today was up 1.5%, 1.6%, a little bit more than that. So hold that in your mind. Equal weight up 1.6% today. And then you compare that with the Vanguard Mega Cap Growth ETF, ticker symbol is MGK, that was up 0.5% today. Yep, it closed up 0.5%. So we got that 1.6% gain, equal weight, broadly equally placed across the S&P 500 versus the Mega Cap Growth ETF, only up 0.5%. So nearly a 1.1% gain across the broader market today. The smaller caps with the IWM being up over 1% helped with that equal spread of distribution. Okay. And then, compare that with the 0.75% gain in the S&P 500 itself. All good, right? So ultimately, with the S&P 500, it was able to settle just the whiskers hair above that annoying 3850 level. It closed at 3852. So again, just a little bit, but what are we expecting tomorrow? Red day. Why? Because it's been red, green, red, green, red, green for the past week and a half. We get a green day, we get a red day. All right, let's look at some of the more individual stocks and your questions. All right. Let me pull up Microsoft, and then I'll pull up one of the first questions that we have too. Microsoft, it dragged down the markets today. It was down 4.4%. Why? Why did Microsoft drop down so low? Because it was downgraded, right? One analyst took its expected price from what, 300 down to 250 a share, and then USB took Microsoft from a buy to a neutral. So that wasn't good either. And also, one other point on the UBS downgrade is the reason for the downgrade was weaker growth for the Azure, which is Microsoft's cloud, and Office 365 for businesses. Didn't do so good. And then a winner from yesterday, Alphabet, it was down 1.1% today, so it didn't do good either. Amazon was down today, and they were among some more of the bigger influential drags on the market. But guess who wasn't? Two companies, Apple and Tesla, who have been huge drags on the market. Apple today, AAPL, and I know I said I was getting to your questions. Let me just get through Apple and Tesla real quick, and then I'll hop over to your questions. Apple today up a whole percentage point, and it's still in that falling wedge, which, you know, maybe we could take a closer look at that. As a matter of fact, let me do that. I'm gonna go to the 15-minute time period just real quick, because even though it was up 1% today, it's been falling pretty hard. Give me a quick second. And then we'll look at Tesla, because we called that yesterday, what Tesla was going to do today. And I feel pretty good about that. Absolutely. All right, let me put the 5-period moving average. And unfortunately, it's that this thing has just been in a very strong downtrend. But the 5-day EMA, which is the most important moving average, you can see it here on the screen. It is still in a bearish context. It is in a downtrend, and price action is underneath that moving average, which is, again, bearish context. If you want to get bullish on Apple, you want to see this moving average start to level out. That would be a positive development for Apple, more so than the 1% gain in price action today. All right. So understanding, again, these moving averages, price action, and so forth can help you understand where it's going. And right now, unfortunately, the context should be more negative, more downside for Apple, which can then lead to more what? Downside for the broader market, the S&P, the SPY. Okay. Doing good. Okay, let's see. Whoa, man, totally missed it. Tomorrow, Apple is dumping. I could see it. This 1% gain here, we're still in bearish context, okay? That 5-period moving average, which is the most frequently tagged moving average there is, in my book, it's the most important. Circuit breaker, right? Or a light switch. The electricity's got to flow through. So for that 5-period moving average, the daily candlesticks need to stay connected. They need to stay connected with that 5-period moving average. And as we go to the daily chart, let me open this up a little bit so we can see a little bit better how it's hanging on with the daily chart. And we got a spinning top candle for today, but it stayed connected to that 5-period moving average. That is a good thing, okay? At least in the sense of the moving average and its significance and why it's important. Because when a candle becomes disconnected from that 5-day moving average, then guess what happens? If it's a down day and it's disconnected on the downside, then you can expect it to either move sideways or bounce back up to reconnect with it. And it doesn't just have to be the body of the candle. It's the wick or body. As long as something is touching it, okay, then that circuit's complete. The electricity can flow. If it is not, then the switch is broken. The electricity can't flow through. Something's wrong. And the momentum is going to stop. It is a great FOMO eliminator, okay? Think of the 5-day EMA moving average as a FOMO eliminator. It won't allow you to overdo it and shorten the hole, right? And same thing going up. It won't allow you to jump in when the market is stretched too high and it's gone as far as it's going to go. Okay, good points there. I'm telling myself, you let me know. Was that a good point? Let's see, what's next here? Amazon is mooning for me. Okay, good. Huge profits for Meta today. Awesome. Yeah, Meta. Let's get the ticker over here. Yes, I am going to Tesla. But let me just pull up Meta right quick. Meta, it had a horrible performance last year, but you can see, look at this. This is an example right here. It got disconnected with its 5-day moving average today. That's not good. That is not good. That is not good at all. That means, and this is looking more like a doji star candle right here to me, which I think being disconnected from the 5-day EMA means we're going down. I would not bet for Meta to have a big green day tomorrow. Not with this little bit of data that I'm trying to share with you here. Now going to the 15-minute time frame. Give me a quick second to update the chart and turn on the 5-period moving average for this time frame, which at the beginning of this live stream, we did go over how to create the 5-day moving average for whichever time frame you're looking at. But you can see that today, we have about a week's worth of data here. This is today, okay? The 5-day moving average is pointing up. That should give you a positive bias, but it's really disconnected from it. That's the negative part about Meta. And yesterday too, with the gap up and move there being up, we also, boom, we saw it moving to the upside, which should give you positive bias. But I mean, we got to go back to Thursday morning. That was the last time the 5-day EMA was touched. It was almost touched right here on Friday. Okay. And then we've got Tuesday and Wednesday. So I'd expect for us to either just hold up here and move sideways so price and the 5-day EMA can start moving together, or we're going to start moving down so we can get back in touch, which would neutralize the 5-day EMA, so we can get back in touch with it. Okay? Now, big wicks can get you there quickly. You don't have to have a big body on the candle to reconnect with the 5-day EMA. So we do have a positive bias here because of the ascending 5-day moving average, but the disconnect is what has me concerned as, again, a FOMO warning or a FOMO eliminator. Don't just go jumping into Meta at this point because of the disconnect, okay? All right, we'll look at it tomorrow and see if this call plays out. I am hugely curious now, and I'm going to write that down to make sure that I don't forget. Check Meta tomorrow. And I always keep this notebook right here. I am left-handed, so it's on the left side of me. I'm always writing notes. I can't remember everything, so I'm constantly writing it all down. So don't forget. All right, check meta tomorrow during live stream. All right, we got that. All right, let's keep moving on. Let's see here. Yeah, I did good in meta too. Awesome. Hey y'all, how are you doing? Glad you're here. Dollar. Let's pull that up. And I am going to Tesla. I know I keep saying that. I want to make sure I get through your questions too, but I also want to look at Tesla because it was up. The dollar, it's still got this sideways movement, okay? And if we, let me take that out. If we look at the 5-day EMA, it stayed connected with it. So just like with the S&P 500, the SPY or ticker SPX, just like with the Qs, just like with the Dow, just like with the IWM, we see this ascending triangle, and we're starting to see a neutral bias with the 5-day moving average. And those two things are telling us that price is getting coiled up. We're in a contraction period, and we're about to break. And since the 5-day is showing a neutral bias, and the ascending triangle, the flat top, the ascending bottom, or the flat resistance, ascending support, can be a neutral chart pattern, we can literally break to the upside or to the downside. That's what the market is telling us. And I hope I think I've said it's too many times, honestly, that I'm sure that's the only thing that you can remember right now from what I've said from the past 47 minutes. Okay, let's see here. I notice when SPY is sideways, that is when all the top stocks start looking different, less correlated. Okay, good point there. The only correlation right now that I'm looking at on a daily basis is how the SPY is moving compared to the dollar. Because at least for right now and all of 2022, there has been an inverse correlation between the dollar and the SPY. If the dollar goes down, the SPY goes up. If the dollar goes up, the SPY goes down. That is the rule. I'm going to call it a rule. That's the rule now until that rule gets broken, okay? Or until that correlation gets broken. I'm not paying as much attention to the correlation between the individual stocks with the indices as much as just technical analysis on an individual stock or the indice itself and the inverse correlation between the dollar and the index, at least for me. And that's what's been working. I know there are 100,000 different things that you can look at that work, as long as you are using multiple things, multiple indicators, multiple technical analysis, patterns, whatever the case may be, whatever you're looking at, make sure you're using at least 3 or more. Now, we can't use 100. That would just take up too much of our time, and we have no time to trade or invest. So at least do 3. The very bare minimum should be 3 different indicators or whatnots. And the more that you do from 3, the greater accuracy you will have. Okay? But at least do 3. Just like for a trend line to be valid, there needs to be at least 3 touch points. The more touch points, the more validated that trend line is. All right, awesome. Okay, let's keep on moving here. 100% exactly. I agree with you. I don't remember what it was I was talking about or what you guys were talking about. I love seeing you guys talk back and forth. Bitcoin has now made, okay. Yeah, Ethereum took a little wobble. It's down now 1256, but it was up a good chunk. Bitcoin, let's see here. What was it? 1.05% today. So, I mean, it's still, doodling along, moving sideways. I'm not seeing a whole bunch here for Bitcoin. But if you wanted to trade it, drop down to that 15-minute level. Let me pull it up here. Yeah, I've got double yellow triangles here on this thing. And now put that 5-period moving average, and you can see we have to go back to let's see, this would be the third, there's the second. So we're still good. We just broke away. This is Tuesday the 3rd, right? It starts inclining, which gives it now a bullish bias from that sideways movement. Oops, I went too far. Oh, let me just redo. Okay. All right. Tuesday, almost to Wednesday. I went a little too far last time. I got a little excited. And right about there. Okay. So that's about our cutoff right there. So if you look at today, we had this sideways movement. Okay. We're disconnected from the 5-day moving average, but it's inclining, which is a positive bias. But what's going to happen? Either we're going to pull back to reconnect with it, or we're going to move sideways, allowing it to come up and tag us. And then, man, those moves were made before the Fed even came out. Bitcoin was pretty solid for when the Fed data drop came. And then, yeah, we've been moving sideways ever since. Okay. All right. Let's keep going. Saw that elbow cuff. Good vibes. Oh, it's still moving? Let's go over. All right, 15-minute time frame. See, last Thursday was the last time this thing was connected with that 5-day EMA. And it just barely, that resistance line that we showed yesterday, which is the red line right here. Now, this is the 15-minute time period. So what do we have? 15, 30, 45. So about an hour or so before the close, this broke that resistance line. But we've got a bit of a zone here, right? Let me go to the daily chart. Let's adjust it right quick. Up 4.3% on the day. So it ran up to that line, that resistance line that we assigned right here yesterday. Oops. Let me hit the undo on, oops, okay. All right, let's bring this down. Okay. All right. Let me remove those two dots there. So it came up to that resistance line that we assigned there yesterday, right there, and I accidentally moved it a little bit. Okay. So that shows you how right there, last hour of the day, it did just break this line. It's still connected with the 5-day moving average with the wick that's under the candle. But for me, for this thing to go any further, obviously this is a total momentum play. This trend line, we need to see a break and close above it. I know we did that today, but tomorrow we need to be above that red line, close above that red line, and maybe even a pullback and back test to show that this is now support. Otherwise, it's getting flushed. And I'm still leaning towards that. I can be proven wrong. Absolutely. But I'm still leaning towards this thing gets a little crushed. It's just getting up there right now. Where's the RSI? 67. So it's not quite to 70 yet. It's getting close, but not quite there. The PMO hasn't leveled out yet. It's still pointing up, so that's still a positive. But if it gets a big pullback tomorrow, that'll roll right over. Okay, I'm still leaning towards the side that this thing, it's stretched, and I wouldn't bet on it. But I can be proven wrong. Let's check it tomorrow. Remind me tomorrow, or I'll write it down. Let's check it tomorrow and see what happens. MULN. See where it goes. All right, let's keep rolling here. AMC will dump more too. Yeah, I'm sure. I'm sure of it. AMC. Let's pull that up. Let's look. Let's have a look-see here. All right, on the daily chart, it looks like it's trying to find that support still. Up 4% today. But, you know, momentum stocks, sometimes that momentum can come out of nowhere. But it looks like it's trying to maybe flag right now, right? Maybe be a bearish flag or a bearish pennant. That's what it's starting to look like. So we've got the expansion move down, and then we are either flagging here, and then we're just getting ready to break lower. That could be a real possibility for AMC and where it goes. What do you guys think? Do you think it's flagging there? You think that's what we're seeing? That's what I think we're seeing. Let's see. How long ago was it? I mean, it's got to be. Okay, here we go. Yeah. That's why we've got that blue line there. It's been a while since I've looked at this. And that blue line, I can extend that out a little further because there's a couple other bumps here that should be included. You can see where this was once support, then, some quick bursts. And when I say support, it held it here before a big move down. Just a couple of little breaks here. But when it broke this, I mean, it was a huge, violent move above it. That doesn't count as support or resistance. If you see that, you see a strong move like that, a violent move up or down on a support resistance line, then the next time around when it comes to that line, to that point, it's going to violently move the opposite direction, right back through it. You can't count it as support. Just going back a little further in history, I can see a little support there, and maybe that's why we're getting this flagging pattern at this price point before it moves lower. Maybe that's what the reason for why it's flagging at this particular point. Let's see here. Futures are going higher right now. Yeah, futures market, I really don't pay that much attention to at this moment because they can evaporate just as quickly as they go up. So they are important, but more important in the morning than I think in the evening, except if it's like around earnings, right? But that break is coming. And with the neutral 5-day moving average and the ascending triangle, it can break either way. And I really think it's going to be data that does it. And we get a data dump tomorrow. All right. ES futures, the same as SPX. Okay. You're welcome. Thank you. Thank you for being here. I greatly appreciate it. I was wondering about that dojo. Sorry. Doji. Seems like a reversal for Meta. All right, let me quickly go back there. So let me show you this real quick on my candlestick patterns here. If you look at a doji candle right here, okay, and we're looking at the one on the left side, you can see this is a neutral candle, right? It typically means that price action or your buyers, they stepped in, but so did sellers at like an equilibrium, equally. That is showing indecision. The market doesn't know where it wants to go. So with that in mind, now add a second indicator or data point, and let's look at the 5-day EMA. It's disconnected, all right? And whenever it gets disconnected, it's got to reconnect. So that's two things. Indecision for the candle. Disconnection from the 5-day EMA shows that, hold up, wait a minute. We either need to move sideways to reconnect, or we need to drop a wick down or drop the candle down to reconnect. And typically 2 or 3 days is it. That's as long as that stays disconnected before reconnecting. And you can see that many, many times on the chart for Meta, okay? Let me show you. If we, it's really, I know it's hard to see. I understand it. But if we look, okay, here's 2 candles. It's connected. The next 3 candles are disconnected before it reconnects. It's connected for 1 day. It connects for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Now it's been disconnected for 2. So 2 or 3 days is typically it for being disconnected from that moving average. It's the most frequently tagged moving average. So we need to send a little anchor down there to reconnect with it. And then our buyer is going to show up to push this back up, right? Is this just a false breakout of an ascending triangle? Could be, potentially. So two things to look at. But then if you look at one more thing, let's use the 5-period moving average on a 15-minute time frame. It's pointing up. That should give you a positive bias that, okay, with these three things in mind, that's telling me that maybe we'll either move sideways or be slower to descend to reconnect with it. Maybe it won't be a sharp fall back down. So those three data points puts this in a neutral position to maybe slightly positive. And then if we add more data, like if we look, okay, so where did it stop at? Well, it opened up right at the upper end of its weekly expected move, which is at 126. The weekly expected move, it's at 127 now. So it's 1 point above its upper weekly expected move. So with that data point in mind, a lot of times when equities get up to or down to their weekly expected move, they'll just hang out there. So that gives us a little more context that, hey, you know what? Maybe it is going to just move sideways along the upper end of the weekly expected move and then allow that 5-day moving average to reconnect with it. Those are the different scenarios I'm running through my head here with the data that I have for Meta, okay? Just technical analysis, not looking at fundamentals or headlines, just the technicals, okay? Headlines can obviously wreck technicals. We've seen that multiple times, but there's big money in these weekly expected moves because it comes from an equation from the options market. And you got big time money in the options market betting on where Meta Platforms is going to be in the future. So that's why these lines are an important measurement. Okay. All right. Let's see here. How many days disconnect is feasible? Okay. With the 5-day EMA, usually 2 to 3 days is max. I have seen it longer in isolated periods, but 2 to 3 days is typically it. Extreme periods are when something is moving rather quickly. Let's do this exercise to show you an extreme condition. Here we have 2 days connected, and then 1, 2, 3, 4, 5, 6 days disconnected, and then it's connected for 1, 2, 3, 4, 5, 6, 7, 8, 9, disconnected for 1, reconnect, disconnected again for 1, reconnect, disconnected for 1, and then reconnect. All right. So the extreme is when we've got a big move, or your typical moves, 2 to 3 days, and that's it. It's reconnected. Okay. Let me know if that is clear or if I need to show more data on it. Either way is fine with me. Just got the notification from the Discord. How's it going? Awesome. Awesome. Statue of Liberty. Hot dog. At least that's what I'm seeing. Seems like the market is going to do something soon. It is, and it's going to break. But right now, with the data that we have, and I know I keep saying Tesla. I'm going to Tesla. But I definitely want to get your questions. Right now, the data that we have is we can break literally either way. We've got overhead resistance. We've got a neutral 5-period moving average. We've got an inclining support, which makes that a ascending triangle, which, adding in the neutral context of the 5-day moving average, we're neutral. We can literally break up or down. That's what the technicals say. Let's see here. Interesting take on the markets. Thank you. I appreciate it. If you have a question, plug it in. Glad to talk. Thank you for sending the share. Okay. Netflix is, oh, Netflix. Did somebody just name the stock I was talking about at the very beginning of this live stream? NFLX for Netflix. Did you notice Netflix, ticker symbol NFL, and then X, right? I don't know. I liked it. I liked it. Big breakout for Netflix right here. We were looking at this yesterday, the ascending triangle, which is neutral, but you plug in that the 5-day EMA is inclining, and that shows a positive bias. Okay? So nice breakout. It's still connected with its 5-day moving average. Where did it stop? It stopped right on its weekly expected move to the upside. Okay? Right there on it, just a few pennies above it. Okay? To be precise, it's a few pennies above it, but it stopped right there. Okay? These lines are important. So what can we expect for the next 2 days since it's reached the upper end of its weekly expected move? Well, one thing to consider is sometimes when it reaches that point, it will move sideways until the close of business on Friday. Because remember, the weekly expected moves are where is the stock going to be in 1 week from Friday? Okay, so we get the data from the options market on the close of business on Friday, run it through an equation, and then we get 2 numbers. And if you understand the bell curve, these 2 numbers are precise down to 68% accuracy, meaning that in 1 week, close of business on Friday, from close of business on Friday, 68% of the time, the stock's price is going to be between those 2 lines. And that is considered a 1 sigma move. In 2022, we had a bunch, well, I guess there were not a bunch, but there were several. Throughout the whole year, there were several times where we had a 2 sigma move in a 1 week period of time, which that has an accuracy rate of like 98%. Again, that bell curve, right? So 2 sigma move would put us up here, maybe down here if it fell that far, right? So that is a possibility, but there typically needs to be something important data-wise that has caused the 2 sigma moves. So right now, the likelihood it's just going to doodle around up here around the maybe 310 area is a possibility. Or if we get bad news, because we get Fed speak starting tomorrow and then more Fed speak on Friday, maybe that could turn things around here, but it would still be within, you know, that weekly expected move, that range there. But glad to see it. Glad to see someone call out Netflix. Great tips. You are welcome. Here, every day the market is open after the close to talk about whatever you want to talk about. Thanks for all your help. I'm starting to understand these charts way better. That is awesome. I am very, very happy to hear that. And if you have questions, plug them in. We can talk about a whole lot of things. A whole lot. Thought on NQ futures. Okay. All right. Oh, did I click the wrong thing? I didn't click on it. Get the NASDAQ 100. There we go. There we go. Okay. So I think, let me adjust this a little bit, make it easier to see. I really think if we look at this, what do we have? Let's put this together. Let's put this together. Oh, I know. I see that about Tesla. I'm going to get to Tesla. I promise. I promise. All right. If we look at right here, I'm a little bit low. This needs to go up just a little bit higher. That's right about where it is. Right there, we've got ourselves a bit of a resistance area, right? Now let's add this other section. We've got ascending support right here, okay? Let me change that to blue for support. So what is that structure telling us, okay? Expansion, which here's expansion. Expansion leads to contraction. What are we doing? We are contracting right now. Contraction leads to expansion, which can be up, it can be down. All right, so now we've got two things to look at. We've got the expansion, contraction, expansion, the breathing of the market. We've got the ascending triangle, which is neutral. Let's go in and now look at where. Let me take the highlighter off. Let's go in and look at where the 5-period moving average is. And right now, we're connected with it. Okay? The next piece of information that we need to know is when we dive down a little deeper. So now we're going to go to the 15-minute time frame. And I know doing this live, it takes a little bit longer, but I want to make sure that I've got good data for you to look at. All right, now we add in that 5-period moving average, and what's it doing? It's moving sideways, all right? This purple line right here. And this is the 15-minute time period, so we got about a week's worth of data there. So what does that tell us? Since it's moving sideways, that is a neutral position. So you shouldn't have a bullish or bearish bias. You should be neutral and ready for this to move in a breakout way. And that's the whole point of tonight's live stream, is that the S&P 500, the NASDAQ Composite, the Dow Jones, they are all, I think, within a 3-session window of either breaking out to the upside or breaking down to the downside. We've got too many neutral coincidences happening right now. The ascending triangle, the neutral 5-day moving average, the connection to the 5-day moving average that we're going to break. So you can see this thing is, we've got a long 15-minute candle right here where this thing is breaking down. If we can break it looks like this level here tied in with this level, and you can see that they are running together to meet down here. If we break this, we're liable to go really far down, okay? So watch this. So where is this at? This is right about 10,900. 10,900, 10,890. That zone right there. If we break below it, then expect to go lower, especially if it's a break below, a back test to it, and then further downside, okay? So I hope I put that together in such a way that not only am I giving you my opinion on it, but I'm showing you how I come to that conclusion. I hope that helps. So we're neutral right now, and literally the technicals say we can break either way, all right? And I'm probably leaning a little more to the downside than breaking to the upside, just because today we ran back up to our resistance area on the daily chart, and going back a week and a half, you know, that's been a place where we turn around frequently, more times than we don't. So I hope that helps to break it down for you. All right, Tesla. Yep, I see it. I got to bring it up. Let's go. TS. Oh, get the cursor over here. TSLA. Now, yesterday during the live stream, we talked about Tesla a lot, and I said a breakout was coming, and Tesla broke out. It didn't make up a lot of ground, right? But it did nonetheless break out, 5.12% today. So let's look at this and see what we can conclude now. Okay. So yesterday, with the purple line down here on the bottom, this is the lower end of the weekly expected move right here. And that's at 109, okay? Yesterday, we broke a little bit below that, and we closed at 108. A lot of times, once we hit the weekly expected move, we kind of move sideways on it. We can be green a little, we can be red a little, but we kind of just move sideways on it. However, we also need to take into account that Tesla, even though it was up 5% today, is still oversold. 28.9, 30 and below, oversold. Buyers stepped in today. Will they continue to step in tomorrow? Well, let's see if we can put some more data together to tell us. It is still slightly disconnected from its 5-day EMA. And remember, typically 2 to 3 days is how long it stays disconnected. So here we have day one. Can we move up a little higher tomorrow to reconnect with it? Yes. And remember, it can be any part of the candlestick, the body or the wick, as long as something touches it with the candlestick, then we're connected. And again, that's that circuit breaker, right? We got to stay connected so the electricity can flow through. When we dig down deeper on the 15-minute time frame, and then I'm going to throw the 5-period moving average on the screen. Remember, we got to change it to reflect 5 days by going to a different moving average, the 130-period moving average on the 15-minute time frame. Now, where's that? It's way above us, okay? Now, with the move higher from the bottom made here, again, this is the 15-minute time frame. This was Tuesday, yesterday, okay? We've been moving up since then, and then kind of moving sideways. So what did that do to the 5-period moving average? All right. Well, it was moving down, which will give you a bearish context. It's still moving down, but it is starting to turn a little. So what this is saying is a little bit on the bearish bias, okay? A negative bias, because it is going down, all right? And trends are important. Once this moving average levels out, okay, then we go into a neutral position. And then if you want to go to a bullish, you want to see it start to move up, okay? And this was a good move. But then we started going sideways. Now, this sideways motion can bring the 5-day EMA to sideways motion, which is neutral, okay? So what the indicators are telling me is that we should have a bearish or negative bias on Tesla. However, the RSI is saying that we are still oversold, and even though it's a bearish bias, we could start to turn more neutral in the near future, okay? So do I think Tesla could move up higher? I do, so it can reconnect with that 5-period moving average. I know it looks like a big difference here on the 15-minute time period, but it's really not, okay? We're going from, where do we close? 1364, and that 5-period moving average is 123. All right, so $113 to 123. Is that? No, hold on. Let me go back here real quick to the daily view. That gives me the data. All right, so we closed at 113, and the 5-day EMA is at 116. So it's not that big of a move to reconnect. And again, that can be the wick of the candlestick, or it could be the body, okay? All right, let's clean up Tesla here. Let's see here. We do have data to talk about tomorrow. Would you mind leaking tomorrow's data real quick so I can position myself? Now, thanks. Sorry, I missed that. There's been so many things to talk about. My apologies. I do want to mention what's going on tomorrow. All right, come here. Come here. All right, tomorrow, we do have some important data to talk about. Number one, ADP employment change. Right now, forecast is 150,000 jobs. The prior reading was 127,000. Initial jobless claims tomorrow. We also get our trade balance tomorrow, our exports, our imports, and then what's the difference? We've been negative for a while, obviously. And then we get Fed speak. Ooh, that's going to be a big one. And it's not really highlighted here with a red flame, but I would give it a red flame. And then we also have a second Fed speaker tomorrow. Those can be pretty insane. The other one that's important over here is the services PMI final reading. Forecast is 44.4. The prior reading was 46.2. And remember, 50 is that break-even line, right? 50 and above, you're expanding, that's growth. If you're under 50, you're contracting, you're making less revenue, okay? You are slowing down. So the forecast is telling us that we're going from slowing down to pushing a little harder on the brakes and slowing down more. These readings tomorrow will be the important drivers. Now, the jobs information comes out at 8:30. The trade imbalance comes out at 8:30 a.m. Eastern. First Fed speakers at 9:30. The last Fed speaker is at about 1:30. Those are all Eastern Standard Times. So we do have some data tomorrow that can move the market. We're up against resistance, but we're in a neutral setup on the charts and a neutral chart pattern. So this thing can break. And I think within a 3-session window, it's going to. And I'm leaning a little bit more towards the downside than the upside on this particular break. But we'll see how it goes. Good review on charts. You are very welcome. Both NFLX and NLTX ready. Oh, you think Netflix is gonna go? There is something special about Netflix. There is. I mentioned it at the beginning of the live stream, but I can't reveal it until Friday. But we did go over it real quick. Hopefully you caught that. What's the other ticker you have? NLTX. Therapeutics company. All right, let's let the data load here. Nice move higher. Let me take that off because it's not relevant on the daily chart. This break is cool, right? It was, oops, don't move. All right, highlighter. All right. This is support turned into resistance, Okay. We're at that resistance point just a little bit higher. We closed technically above it, right? We're in an ascending triangle, that flat top, the ascending support. We are disconnected, and today was day 1 of being disconnected from the 5-day EMA. The 5-day EMA is inclining, which should give you a positive to bullish bias, but also taking into account it's at support, but it's in an ascending triangle, which is neutral, that can break either way. This is ready to break, absolutely. Going higher, I'll let you make that call. We can check on this tomorrow to see if that that breakthrough that we had today of breaking that resistance line, if we can stay above it or at least close above it tomorrow, even if tomorrow's a red day, right? Where we kind of, close right on that line, holding as support, then I think you've got a pretty good launch pad there. Just speaking off the technicals of this. So let me write this one down to go back to it tomorrow, NLTX, and we'll check that out. You mentioned I could share a link yesterday. Yep. I think I fixed it. Were you able to view it? You can share it. Absolutely. If you feel free to share any charts you want, articles, feel free to. Absolutely. You definitely don't have to ask. And sorry it took me so long to get to your comment down there. I do believe on TradingView, you click this to manage layouts. And I believe it's this sharing toggle right here that you have to click in order to share the chart. So feel free to, absolutely. Absolutely. Okay. Any other questions? Or we can wrap this up because I did cover everything that I wanted to. The only thing I can think to mention is that with today's green and move higher, all 11 S&P 500 sectors did close in the green. Oil, which was a big loser yesterday, it was in the green. I'm sorry, energy sector, big loser yesterday because oil was moving. It was green today, but kind of low on the leader list. Thanks for another good one. You're welcome. Here every day the market has closed between 7:30, 8 p.m. Eastern. We go live. The most important thing is to talk about what you want to answer your questions, but also to talk about what happened, why it happened, and what to expect going forward. Those are the four big things. Answer your questions, talk about what happened in the market today, why it happened, what caused it, and then what to expect going forward for tomorrow. Those are the four big things for why this live stream exists, okay? And that number one thing is you. You are appreciated, and I absolutely love all the questions. Absolutely love it. Okay. Have you? I haven't seen that link come in yet. If you're still hanging around, go ahead and pop that one in. I'll be happy to pull it up. Otherwise, we'll wrap up the live stream for tonight. Well, I'm waiting on your link to come through if you're still watching. I'm just kind of dragging it on now, just kind of waiting to look at that chart. Meet me back here tomorrow. Do me a favor, click the like button, share this video with a friend. I know it's cliche to say it, and everyone does, but it does help. It really does. And the more investors, traders that we can all communicate and talk with, the better we all are. So, okay. Well, Junkmaster, if you have already left, anytime, feel free to share your link. Absolutely. Sent it twice. Not sure why it isn't showing up on your end. Sending on Twitter. Oh, I just got it. I just got it. Clicking on it now. Opening up. Oh, I think it's going to load. I'll pull it over here in just a moment. There we go. There we go. All right, let's pull this over. Okay. All right, so here's your chart. Looking good, looking good. Let's go in. Yeah, this is looking really good. You got the trend line. You got it, man. Absolutely. You got your Bollinger Bands on here. You've got your, what do we have? 50-day moving average. Is that a 9 and a 15? Yeah. And this is where you're expecting it to go. I would agree there. We're getting awfully close. If I can't draw on this myself, but you could see the expansion move down, right? When we're up here around the 410 level, that peak right there, and then the big expansion move down, I can see like a bear flag right here forming, which is just going to mean that's another leg lower right there. And then you've got the trend line down there. That's looking good. I mean, that's been very accurate. Taking it down to 324 there on that trend line. Yeah, I I can definitely see this playing out, because once we get to earnings season and we get that first week, I'm looking to go short on financials like XLF. I really think, with the yield inversion and with, bank earnings first up on the chopping block, it's going to be, I think, negative. I really, really do. And that's going to pull this market down. And you've got it marked there on your chart. So yeah, I agree with you. I think this looks really good. You've got some good data points on here. You've got some big plots, big trend lines, which are the important ones. Really good. You do a good job with this charting, I must admit. Excellent. Yeah, I see your Fibonacci lines there. See, we're kind of hanging around. What is it? Let me go back over here right quick to my chart. I just want to put, if we just go with the Fibonacci from the 22 low to this high right here, we're just above that 50% retracement, and we're kind of hanging around right in between 37.94. I should go to the SPY to make this apple to apple, but 379.4 or 37.94 should be about 380 on the SPY. That's right about the 50% retracement level, which is right where the last bounce on this support trend line. And then resistance, it's not quite up to that next 38.2 or 38.66. It's really been that 38.50 that's been the kicker as resistance. And 38.50 should be about 385 on the SPY. So yeah, I definitely see your point, and I think it's awesome. The timing on this, I really do think we got that Fed speak tomorrow and Friday is going to be important. And on my ascending triangle that I've got, I think we could be 3 trading sessions away from a potential breakout, or most likely breakdown, leading to the negative there. But yeah, I love your work. You did great. And I think you got this. Let's see, what is this? This will be the 9th right here as like a bounce from, and then you really go down on the 13th, because once we get to earnings, I think it's going to come down hard, and that's what you've got here. You've got it coming down hard starting on the 13th of January, not catching a bounce to February 6th. Hey, that's my birthday. Okay. Yeah, awesome. You did a great job here. I agree with you. I think we're going to break down, though, any day, and that's what you've got. You've got it already set to break down. Just real good job. Real good job. And your points here, 365. Yeah. And you can see that back here being, yeah, wonderful. Excellent job. And I totally agree with you. Absolutely. Should have thrown this up, but I didn't want it to get in the way of your chart. You did a great job. Yeah. I think it's awesome. Okay. You are welcome. Absolutely. Anytime. 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 Absolutely. All right. Well, I'll wrap up the live stream for tonight. I'll be back tomorrow after the market close. We'll start between 7:30, 8 o'clock Eastern, go live then, answering your questions. That's the top of the list. And then talking about what happened, why it happened, and what to expect going forward in the markets. Whew. Yeah. Okay. We'll wrap it up here. Thank you guys so very much. I greatly appreciate each and every one of you. I love your questions, and I love the talking that I see going on between you guys also, and gals out there. So thank you for that as well. Please do me a favor, click the like button, share the video. Those two things really do help. I know they're cliche, but gotta say it. Have a wonderful evening. Good luck tomorrow, and I'll see you in the next video.